Welcome to the Financial Update with First Community Bank, live every fourth Thursday of the month on WLIJ and podcasted on Facebook. Join guests from First Community Bank and our host as they inform, educate, and encourage you on all things finances. First Community Bank is a member FDIC, equal housing lender. Now, here's your host.
This is Benny Pulley, behalf of Hopkins Farm Broadcasting. I'm here, this is with the First Community Bank Financial Update, and I'm here with Sterling Smith, First Community Mortgage, and we're going to talk about mortgage 101, basically, and we're going to go through some of the things, the tips and things that people need to do when purchasing a home and financing. So, Sterling, first of all, let's start off with you. Tell me a little bit about you, what you do, and as far as where you started and where you went to school, and that way we can get a little information about you.
Yes, sir. So I run the First Community Mortgage branch here in Shelbyville, Tennessee.
Okay.
Born and raised here in Shelbyville. Parents were here. Spent my whole life here. Went to Aiken Elementary, Thomas, Harris, and then Central High School. Went to school at Middle Tennessee in Murfreesboro, and then moved back here. Got married, 2 kids.
All right.
Yeah.
So how old kids?
I've got, my oldest is going to be 4 next month, and then youngest will be 2.5.
All right,
so,
boys or girls?
2 boys.
2
so
boys.
We have our hands full.
Yeah, well, I know that's what my family, we had 2 boys. So, yeah. So, when did you start doing the mortgage department?
Started as an intern in college.
Okay.
In 2017, and then started kind of my career as a loan officer in 2019.
Okay. And then when did you get promoted to, I know you're vice president and manager of the First Community Mortgage, so tell me a little bit about that.
That next year.
The next year?
Yes, sir.
Wow. So you must be real ambitious and have lots of good goals.
Try to.
Well,
yes,
that's the key when you're in doing stuff like that. So,
that's right.
Of course, I've done real estate for years,
right.
And me and you've talked, and of course, Chase was going to host it, but he thought I knew more about it. And I don't know what he'd do or not, but we'll give it a shot. But anyway, when you're doing a mortgage, just give me some basic tips, I guess, of what you would need to do to get a basic home loan.
Right. So everything in our world basically boils down to 3 separate topics, right?
Okay.
Cash, credit, and income.
Okay.
So first thing's cash, right? The more money you can save up, the more money you have to invest in a transaction,
right?
The easier it's going to be. Now, these days, we have a lot of awesome programs that will give you 100% financing. We can have closing costs covered. We have people all the time that buy a house and bring no money to closing, right? But the more cash you have, the better, and the easier it kind of is. More options you'll have as a borrower. So that's first step. Second step is credit. Everybody has credit score for the most part. Everybody does. The higher the credit score, the better terms you're going to get. So the better interest rate, better closing costs, better monthly payment, so on and so forth. So the goal should always be get your credit score as high as possible. And then the last step is income. There are certain guidelines we have to follow around what income we can use, what we can't, how much of that income can we actually use to qualify you for a home. Right. So if we can focus on cash, credit, and income, that's kind of the main sticking point as far as whether you can buy a house
right.
or not.
Now, and a lot used to, and I don't know whether they still do, I'm sure they do, where they say they can buy down their points.
Absolutely.
So that's with the cash. Is that?
That's right. That's another thing is if you have cash set aside for it, we can use it for down payment, closing cost, buying down that interest rate.
Yeah.
Lots of different options.
Yeah. So then also say, like me, when I always would sell a house, I would always tell my people they need to go to whoever they're going to get their loan from and get a pre-approval letter.
That's right.
So I know what price house I need to sell them.
That's right.
Okay. Now, I'd always tell mine, I don't know whether people do it or not, but a lot of agents won't do it. If they qualified for, say, a $400,000 house, I said, this is what you want. Do you need a $400,000 house?
Man, that's a great question.
Could you get by with one that's $325 and getting the same features?
That's right.
Because most people want to oversell them. And for me, as a family man, I don't want to put a burden on them that they're not going to be able to handle.
That's exactly right.
But a lot of people don't do that. They just want to sell them the most expensive house out there. Let's get it done. But when they do that pre-approval, when they come into your office and say, we need to get a loan, this is what we got to do, and I've got to have a copy of this to send to my agent.
That's right.
So what is your process when they come to your office? What do they have to do?
It's changed quite a bit, and for the better. So one benefit we have now is the ability to do a soft credit pull.
Okay.
So we can do a full pre-qualification, review your application, and tell you whether you can buy our home or not without even hitting your credit.
Well, that's good.
In a negative way. So that's a huge benefit that started over the last couple of years. Our process is bring the client in, have them fill out an application. We review everything so that when we tell them, hey, you're good to go buy a house, we've tried to check every box, cross every T, dot every I. It's solid, right? Things can always change, but we try to do all the hard work on the front end.
Okay.
What it also does is allow us to kind of ask those questions. A lot of times people don't know how much they want to have in a monthly payment or how much money they want to spend or anything else. Part of our goal in the pre-approval process is to help them find those answers.
Right.
So we try to structure everything around not how much do you qualify for in a house, because a lot of times on paper you qualify for way more.
Way more, yeah.
We're worried about what can you and your family afford on a monthly basis to not stretch yourself so thin that if one little thing goes wrong, we're worried about not making a payment.
And so that's the key with most people, and I'm glad y'all do that, is you don't want them to have a payment so big that they're going to miss, like, food,
that's right,
electric bill or water, because if they get behind on any of that stuff, then that puts them further behind and then eventually missing the payment.
That's right. Especially because life happens.
No, it does.
Right?
Yeah.
And you need to be able to adjust with that when it does.
And you need to have that little bit of comfort zone, where
that's
you're
right.
not pushing. And that's why I always suggested, do you need that big a house? Some of them say, yeah, I got to have it.
Right.
They didn't really need it, but that's what they wanted, But, that's the key. And when you're doing the pre-approval, so say I'm applying for a loan. When I come to your office, what do I have to have with me? Do I need like a statement of my income, all that kind of stuff?
Yeah, so it's a little different just with the way technology has evolved. A lot of times, typically it's pay stub W-2. Well, a lot of employers these days are using these automated verification services where I can pull all the income information myself.
Oh, well, good.
You don't have to bring anything.
Well, that's good.
Same with your banking information for that cash piece of it.
Right.
A lot of banks are connected to services where, with your consent, we just pull it through. You don't even have to chase down any documents.
Well, that's great.
So it's really, really simple. It's become a streamlined, efficient process that doesn't require
technology.
It's an amazing thing.
It is. So, what are some of the, I guess you would say, some of the most common mistakes that people make? I know of one that used to happen a lot when we applied for a loan, is you tell them, don't apply for no credit anywhere for anything.
That's right.
Don't buy a new car. Don't buy nothing. You're going to get approval for a house. Do not purchase. Do not do anything like that. And sure enough, they go out to Lowe's and establish a $3,000 line of credit, and bam.
Yeah, and it can cause a lot of issues, right? So
it does.
That's probably the number one mistake, is doing something without checking first.
Right.
Right? Because there's plenty of times where someone will say, hey, my truck broke down. I got to go buy a new vehicle. Let us run the numbers. Okay, you're still fine. You can go buy a vehicle. It's when we don't know about it that causes the problems. So that's probably the first mistake. I would say the second mistake is waiting until they're in a position where they really have to buy a house and then trying to figure out if they can or not.
Right.
We tell people all the time, like we said, we can do a soft credit pull. It doesn't require more than like 5 to 10 minutes to even do an application now.
Yeah.
If you think you're going to buy a house a year from now, have someone review it now so that if there's stuff we need to work on, we've got plenty of time to work on that stuff.
Right.
Instead of a month before the lease runs out, they're not going to renew the lease. We've got to move in 30 days.
Yeah.
And we've got 6 months of work that we need to do before you're going to be ready to purchase. That's the
and a lot of people don't understand when you are purchasing a house, if you can, the more you can pay down on some of your credit,
that's right,
it will make you look better on paper.
100%.
Yeah, and it'll help the loan go a little easier.
It will.
So any other mistakes that you can think of that might?
I would say not verifying who it is you work with.
Yeah.
And that's real estate agent, lender, all the way through the process, right? Make sure they have your best interest at heart and not their
interest.
dollar.
Yeah. And that I found that out in the real estate business because dealing with other agents, and I'm not saying all of them, but
most of them are great.
Most of them are great, but you have some that are not, and then they're doing it strictly for the money.
That's right.
And you just got to be careful of that kind of stuff, and you got to make sure your client is taken care of, and that's the same way with y'all. Y'all got to make sure your client's taken care of.
Absolutely.
So I was thinking, like when they come and do a pre-approval, you've approved them. They're going to buy the house. They've put a contract in on the house. Do you suggest them? I do. I want to check to see with y'all. Do y'all suggest that they get a home inspection?
Absolutely, 100% of the time. Buying a house is, for most people, going to be the biggest investment they've ever made in their life.
Sure.
Take the time, to get a home inspection. Make sure you know exactly what you're walking into. Yeah. Because once you buy that house, we don't really have a lot of options. It's yours now, right? Yeah. So anything wrong with it, you're going to have to own on your end.
Now, I'm going to ask you a question. This is going to be some people don't do this. Well, it's a new house, Sterling. Why do I need a home inspection?
Yeah, it's a tough answer there. So the main thing is, the way I would describe it is, we're all humans, right? Yeah. Mistakes are made. Things happen that fall through the cracks and don't get noticed, right? Yeah. When you are purchasing a home, there are inspections that home has to go through to even pass local codes and get a certificate of occupancy and all that good sort of stuff. It is entirely possible that something small is missed, right? In that world, they're looking for the major issues. Yep. Not necessarily the really, really minor details.
I tell them, I said, no, don't worry about the little knock on the wall. We can get that fixed.
That's right.
That ain't what we're looking for. We're looking for that structural or something that's going to be electrical or something that's going to be a problem. So when I had them do an inspection, I mean, if it's new, I don't care who the builder was.
That's right.
We're going to do an inspection because they have a lot of subs that come in on the job. They might have a new sub that they've never used before.
That's right.
And they might have made a mistake. Maybe in the wiring.
Or it just didn't get caught, right?
Yeah.
Like
you just never know.
That's right.
And it's just a good insurance policy, I call it, to have that home inspection so you know right up front.
Right. And it's also something, too, where even if it's not something that we're going to ask for the seller or the builder to fix, we know what's coming down the road, right? That home inspector may say, hey, this is fine for now, but 5 years from now, you're going to have to replace that roof or the HVAC or whatever it is.
Right.
Now we know when we can plan for it.
Right. Yeah, and then that's always them surprises. So we're going to take a 1-minute break, and we will be right back with Sterling Smith.
Ladies and gentlemen, have you been looking for a way to support your local schools and organizations without dipping into your own pockets? Then listen up. Since 2017, First Community Bank has been donating 3 cents for every swipe made on an FCB debit card to teachers, classrooms, sports teams, and organizations of each customer's choice. Those swipes have added up to over $100,000, and it's so easy to get involved. Just use your First Community Bank debit card for everyday purchases and watch the donations roll in. Don't know how to set it up? Give us a call at 931-684-5800, and we'll help you get started. Let's make a difference, one swipe at a time. Member FDIC, Equal Housing Lender. And don't forget about the Moore County Branch's 20th Annual Chili Day, Tuesday, November 5th from 11 to 2 at 535 Majors Boulevard in Lynchburg.
You're listening to the Financial Update with First Community Bank. Now, back to the show.
All right, this is Benny Pulley, on behalf of Hopkins Farm Broadcasting. I'm here with the First Community Financial Update, and I'm here with Sterling Smith, Vice President and Manager of the First Community Mortgage. And we're just going over some of the things, what you need to do to get a loan, all this kind of stuff. But I know there are several types of loans that you can get if you're buying a house. So sort of explain the different ones, if you can, just to give us some hints.
Yeah, there would be, I guess you would probably say 4 major types of loans. So you got your conventional loan. That's the traditional loan everybody thinks about, right? 30-year fixed rates. Down payments anywhere from 3 to 20% plus, right? Second type would be a VA loan, so that's for our veterans.
Right.
There's some benefits there for veterans that aren't on other loan products, right, that really help them purchase a home. Third would be an FHA loan. So this is typically for a lot of your first-time home buyers. Low down payments, really low interest rates. It's a government-backed loan, so it kind of it protects the lender a little bit. There's not as much risk.
Right.
And then rural development is another loan that we do a ton of around here. 100% financing, so no down payment. As long as you're under a certain income limit and the house is located in what they deem is a rural area.
Yeah.
100% financing, great loan product. We do that a lot for first-time buyers.
Yeah, I know Murfreesboro, when I was over there, I was doing a lot. If you got right outside the city limits, all that was rural, so you could qualify for rural.
Yeah, and what's nice is around here, anything Bedford County, Coffee County, and south, whether it's in the city limits or not, it's still considered a rural.
Yeah, when I got a commercial loan with my business when I had it here, and it was a rural development.
Even right in the city,
right
it's still considered rural for us.
And it was considered rural, so, but that's good that you can get those types of programs. Now, I know with VA, there's several things that you have to do in qualifying for a VA that the house has to qualify. It has to have certain things on it. It has to have certain... So they
all kind of safety
things, precautions.
Features. That's right, and that's pretty much across the board on all government loan products.
Yeah,
anything that's not conventional, they're going to follow kind of those same standards.
Yeah. Now, when you say we're going to get the pre-approval, we got that done. We've gotten the house contract. We're ready to go to them. We've gotten you to approve it. Okay. What steps is next for them as a homebuyer? They're going to go to closing and all, but is there anything else that they're going to have to do before they go to closing as far as y'all are concerned? Are they pretty well done with...
once we go under contract, we'll do an appraisal. We'll get title work done from the title company to verify,
everything's right.
Everything's paid off. There's no problems with the title to the home. It's going to be good to go, right, when you close on it. Setting up homeowners insurance, we help them with that. Go through underwriting, get everything in, get your final approval, and then go to closing and sign the paperwork.
Yeah, that's you always like to see the expressions on their face when you hand them those keys.
Oh, yeah.
And it makes them, they're happy about it.
That's right.
So I know y'all don't do commercial here, but I know the bank does them.
They do.
Yeah. But now, y'all's mortgage company, of course, people don't realize. First Community Mortgage, I think, it's a local hometown. Well, it is a local hometown.
That's right.
But they've expanded. So give me a little bit of idea of how big First Community Mortgage, because let people think, that's just a small town bank, they can't do it, but y'all got a lot of clout.
A lot, and especially with considering it started on the square as basically a one-man shop, and he's grown it to what it is now. I think last I'd heard we were 500 plus employees, pretty much all over the United States at this point, especially in the Southeast, Midwest, and kind of West Coast. So we're a national company now, but still owned by a local bank that is kind of where it all started.
To me, that's I remember when First Community Bank first started. I was down here when it started, and the guys that had started it and all, and I remember a lot of them guys, but it was great to see them start this and then grow into such a large.
It's crazy now that First Community Mortgage will be, for several years now has been a multi-billion-dollar company, and that we're doing billions of dollars of loans each year.
People don't realize they're in Shelbyville.
That's right.
But when you reach out, to other places, everybody knows First Community Mortgage.
Absolutely.
Yeah, and that is great. We've got a few more minutes. Is there anything in particular you would like to talk to about? The process or anything that might be key for them? Yeah. We talked about a few of the things, but
going back to earlier, the main thing is just get in touch with someone earlier than you probably think.
Okay.
That can give you the guidance and kind of lead you down the right path to get you where you're ultimately trying to get to, and make sure that person is just as invested as you are in getting to your goal. Right?
Got you.
Getting someone who's really worried about your interests.
Yeah, and that's the key. And I think every person out there that don't own a house, I had a buddy of mine that rented for 30-something years. I mean, for 20 years, I talked to him. I said, you need to purchase your house. He was paralyzed from waist down, but he never took the chance to buy a house. And, of course, when he passed away, he was renting an apartment. And, and I'm going, you could have had equity built up, because people don't realize when you buy a house. I remember the first house I bought, it cost me $42,500 and the rate was 14%.
That's right.
and I thought, whoo, can I make it? So, and the payment was like, I think best I remember was like $287 or something like that back then. And so what I did was I would make a payment, and they told me anytime I made a payment, they give me an amortization sheet, and anytime I made a payment, I could pay as much toward the principal as I wanted to. So I would take and say the principal payment was $150. I might make 5 principal payments plus my note, and bring the thing down. And so like in 3-4 years, I had it paid off.
Yeah, that's awesome.
But a lot of people don't do that. I know y'all's are what they call simple most time. Is y'all's like that too?
Yeah, you can pay extra
toward the principal.
Absolutely, extra payments anytime. No penalties for early payoff.
Yeah,
it's one of those things where I heard someone say a quote the other day that I thought was pretty interesting. Is that buying a house in a 30-year fixed-rate mortgage is the greatest weapon against inflation that there is, because what you're essentially doing is locking in what your housing expense is going to be for the next 30 years.
Yeah.
Right? Inflation is such a hot-button topic these days.
Yeah.
Being able to lock in that housing expense, inflation can be 10, 20, 30%.
Yeah.
That housing expense for that homeowner is never changing.
And the key is, and people don't realize it, as you're building your net worth, the house is probably one of the biggest investments you'll make that will pay off in the long run. Every piece of property I've ever bought, I always made money on it by keeping it for a little longer. Yeah. So, just use an example, like when I sold my house, like I said, it's $42,500, best I remember. I sold it for like $69,000, and I'd only had it like 3 or 4 years. Well, then I came up here and built my house, $110,000 what it cost me to build it. And now, the whole thing is worth probably about $1.5 million where I'm at, because of the property value just keeps increasing. So it's a financial investment that you're going to get well paid over in the long run. And people don't realize, because it's just one of those things that you don't think about it when you buy it. You just want a place to live.
That's right.
But the longer you keep it, the better off you are.
It's a good investment. That's right.
So now, when you're doing the VA and FHA loans, is there anything different about them when they apply for them? Of course, VA, we know they have to be a veteran. But now the FHA and the USRDA loans, is there any difference there? I know it has to be rural. We know that.
Yeah, stuff like that.
As far as
there's certain programs within those kind of larger pictures that there might be certain programs for lower income and you have to be under a certain income, or there might be certain programs that you have to have a minimum credit score of 640 even though the regular program might only require 600, different things like that. The key is, again, finding someone you can speak with that will take all of your information and do all the work to research each and every option,
which one's
and
best
then tell you qualify for these 3.
Yeah,
this is your best option because of X, Y, and Z.
Yeah, and I think that's the key. And as far as credit score, you talked just a little bit on it. Do they need to be like a 600 or above? Basically,
we've got some loan programs that go down to 580.
Okay.
It's just if the credit score is lower, typically the cash situation and the income needs to be better, right? Yeah. So it's kind of like if one's lower, the other two need to compensate for that.
Yeah, and that's a hard thing when you think about the credit score, because it's hard to get it back up.
It drops fast.
It does.
Climbs slow.
Yeah, and then if anybody like you. And a lot of people don't know what soft close is. Soft credit check. In other words, you're not pulling a hard one, because once you pull a hard one, their credit score drops.
Yeah, just a little bit,
5,
especially if you're having it pulled 3, 4, 5, 6 times.
So if I went to you and then went to another bank and then went to another, I've lost like 20, 30 points, and you don't want to do that.
That's right.
It's just find one place you want to go to it and get it done.
Especially if they have the soft credit check where we can analyze a full credit report give really good information on how to improve it. How do we need to optimize that score, pay down this account, increase the balance on this credit card. Sometimes we need a balance on a credit card to get the best credit score. Different things like that. But that soft pull does all that without actually doing any.
And a lot of times they, best I remember, they will pull your credit that you've got with other places and see how you paid. If you paid on time, if you paid
payment
not
history
late payment. Now, if you have late payments, that will affect.
It's going to affect it.
Yeah,
absolutely.
So, what is the loan rate? I don't know about today. I only had time to check today, but what was it yesterday?
Huge range, right? Because it all depends on credit and
which
all
loan
this other
to
stuff.
get.
That's right. But in general, right now, rates are anywhere from mid-6s to mid-7s, depending on
about
all the variables. That's right. Now, the tough part is rates have gotten worse over the last month, but over the last 6 months, we're still better than we were, 6 months ago. So
now, does it look like right now that they're trending up just a little bit, or is it every week a little different?
Yeah, I think this recent uptick is probably a blip in a general direction downward. There's just been some inflation ratings that have come out recently that have thrown things into.
Yeah, and like we was talking earlier before we came in here, I remember when it was 16% and people think 7 is rough.
16 does not sound like
16
fun.
Ain't the best. But you come through those times, you're going to have times like that where interest rate, but it's best for a person who's going to buy a house to go ahead and get pre-qualified, lock in that rate, because rate's good for 90 days usually.
Typically we can do a lock for up to 90 days.
Well, that's what I thought, because that's the key, because if you can lock that rate in, and then if it does drop, y'all adjust it. But
that's right.
If it goes up,
you're
locked.
still locked in.
Yeah,
that's
that's the key. So any other things you want to talk about?
I think we covered just about all of it.
Well, give me your phone number there at the office, and if anybody wants to pre-qualify and get their loan started, what number would they call?
Yeah, they can call us 931-205-1424.
Okay. And ask for Sterling.
That's right.
Tell him you heard you on the radio.
Yes, sir.
But I appreciate you, Sterling, for coming in and doing what you did. And I hope y'all got enough on this. This is basic 101 mortgage. And we appreciate First Community Bank and the financial update. I think it's going to help a lot of our people in our community. I think it'll be a good benefit for them and helping them in process of how to do it.
Yes, sir. Well, thank you so much.
Yes, sir.
Yes, sir.
Y'all come us back. Hopkins Farm Broadcasting. We thank you for tuning in, and we will see you next time.
Come on now, admit it.